Welcome back, guys. I'm Kenya with BK Forex Academy, and in today's training, we're talking about a profitable and powerful chart pattern strategy, flag patterns. Now, this is nothing new to a lot of you, but I'm going to show you how we use it and how you can use it as a strategy or to use as confluence in your trading. If you are a new or struggling trader, I strongly recommend you check out our academy. We provide structure and guidance, a private community, and everything you need to be successful. Do me a favor before we hop in, smash the like button on this video. Make sure you subscribe and turn on notifications. And now let's go. All right, so let's hop in. So notice that we're on the daily of CAD Chef. Now, the first thing we need to do is understand what are flag patterns. So you're going to see these flag patterns on every time frame. And what you're looking for is a strong trending move upward or downward. So I'm going to show you an example of both. Let's go ahead and take a look at an example of a bearish flag pattern. Now, again, you can trade these on all time frames. So you can scalp, intraday, and swing trade. I like flags preferably for swing trading because I like to capture large moves. I also like using flags for confluence, extra confirmation for other strategies that I trade. So notice here how price was previously in an uptrend on CAD Chef. So we're previously in an uptrend, price was trending higher. So look here, and then it came to this resistance area at 77.94. So right around here. Came to this resistance area where price fell to break higher. And then our first indication of a possible turnaround was this bearish engulfing pattern here. Price then consolidated and then continued to move lower. So when you see a bearish flag pattern, it usually will happen after a large move. So you're looking for big red candles. So after this large wave, anytime we have a big wave like this, we want to see a correction. And one thing that you can do is that if you want to trade the flag, you're going to look for price to correct. So the correction is actually the flag. So I'm going to clone this and I'm going to bring this trend line to the other side of the flag. So this is the other side right about here, okay? And now you can see that we call this the flag, this little area where price is trapped in between, and this would be our flagpole. So this is why we call it the bearish flag. This is where it gets its name. So it kind of looks like a flagpole, like how we put our flags on a pole. So here's your pole, which is the wave, and the correction is your flag. And what we're looking for is for price to continue downward. Okay, so this is a continuation pattern. So you have a wave, a correction, and then what we'd like to see is a continuation of that flag. Now, how do you know where the price is going to stop? So when you have a large move down or up, one of the things that you can do is you can measure the correction with your Fibonacci tool. Now, if you're not familiar with how to use Fibonacci, don't worry. You can there's many videos out there where you can go and look it up and try to understand it. Or if you guys are in an education program, it should definitely teach you this. But you would take your Fibonacci retracement tool, you measure from the top of where the wave started to the bottom of where it ended and started to consolidate. So I'm going to always drag it to the wick. You want to drag it to the bottom of the wick. And then what you're going to do is look for a retracement off of the 50% to 618 zone. Now, sometimes it will only correct to about the 38% zone. However, the magic with Fibonacci is that price tends to hang around or reject around the 50% or 618 fib level. So in this case, if you see that price is rejecting off of these areas, you see a lot of wicks, that's an indication that that move will continue lower in a bearish flag pattern. So when is the best time for us to enter into the trade? So you have different options. Now, everything that I'm going over right now, again, you can use this on any time frame, okay? So right now I'm going over the bearish flag pattern example, and then we'll go over a bullish flag pattern example. So the best time to enter the flag is after a breakout. So say, for example, here, if we had a bearish flag pattern here, which we do, we would enter this trade on the breakout. So you can see the break of our trend line. We would have entered on the lower time frame. So you can drill down to a lower time frame. So notice we're on the daily. What you could do is you could set yourself an alert like a few pips outside of this trend line. So set yourself an alert. I have two alerts on here right now because our Academy students are in a trade that we called this morning. We are selling this pair right now. So you'll notice that I have these alerts on here, but I always use alerts to notify me so that I don't miss entries, or if I want to be notified when my targets hit, then I use those alerts. Okay, so I'm using TradingView. Whatever platform you use, you can see if you can use alerts so that you don't miss out. All right, so we can trade the breakout of this flag. So once the price is breaking out, moving downward, continue moving downward, right? So it has already dropped. Notice that the price already dropped. Let's see how many pips it dropped from here. So it dropped already about 74 pips. So again, we had price drop. Notice where it stopped. It stopped at a previous area of resistance. That was also previous support. That was also previous resistance. So this is a reversal zone, right? You see that? And then after we have a breakout, for traders who missed that initial move, you could also wait and get back in on a retest. So this is the retest that's happening right now, where the price broke out and now it's retesting near that trend line area, which is also a previous area of support and also resistance as well. So we will look to get short right around this area here off of the retest of the trend line. Now, could the price go and move back within the flag pattern? Absolutely. So you have to document your system to see what your stop loss placement is best for you. Some traders will want to be a little bit more conservative. I like to use a 50 MA. So I like to use a 50 MA, regular 50 MA, and I like to either place my stop above the 50 MA in a downtrend, or the other option is to place it outside of the flag or above structure, just enough room for the trade to breathe. So say, for example, if you get in here, you could do maybe a lower lot size if you believe price could go and push to the top of the resistance, which the trade would still be valid because it is still trading in a downtrend. But let's say it does pushes up 50 pips to the upside, you could enter a second position here with a slightly higher lot and then take that move down. You would use the same stop loss for both of your positions if you place it above structure. So that is a idea for your stop loss placement. Okay, so I've gone over entry, I've gone over stop. Now let's talk about targets. So when you are trading flags, you're looking to trade the break of that flag, right? So let's look at this flag here. If the price broke out, the very first, now one thing you could do is trade with multiple positions. Your first position, you simply could take profit at the first zone. So I like to trade from zone to zone, from the break of the breakout to the next reversal zone, which is right here. This was previous support, it was previous resistance and previous support. So that's only about 35, 40 pips, right? However, if I'm swing trading, I'm going for more pips than that. So that would be my first target, because look, price came here, it dropped a little bit below it, and now it's retesting. It's still trading in a downtrend. And remember, if you're swing trading, you're in this to capture the large swings, right? So my next target would be the next major zone down, which is about right within this area here at 73.98. You can see that this is a very strong support zone. So support, support, and if I keep scrolling, I'm sure this was resistance as well. Yep, right here, resistance, and look how much the market moved, okay? So this would be your first major target as a swing. And then you could continue to trail your stop loss if the price continues to move lower. So that is an example of a bearish flag pattern. Now let me show you an example of a bullish flag pattern, which is the same concept, and we're just gonna go ahead and reverse on the chart. So let's say right here, you're basically going to identify an uptrend. So you're gonna identify an uptrend, and you're gonna find where you had a strong move upward. So notice here you had a breakout of this resistance, price continued higher, it retested this resistance here, you got a small pullback, not much, price continued higher, okay, and then you got a sideways movement where price consolidated, it pushed higher, and then it came back down. So what you want to see is that you have a flagpole or an impulse wave to the upside, followed by a nice correction. Okay, so this would be, for example, your flag pattern right here on the daily. So you just are going to identify a flag, and then you're going to catch that breakout. So notice here the price broke out of the flag, so you want to catch a clear breakout. It went about, so the first day it went about 33 pips in profit. I don't know what day of the week that was. Volatility was probably a little bit slower. The next day altogether it went about 78 pips in profit, and then gave us another pullback, which was another flag. So all you're going to do is find flags in an uptrend, and you look to trade the breakout of the flag. Now, one thing you can use for confluence if you want is you can use a moving average indicator. So what I mean by that is that you want to have entry reasons for why you get into the trade. Number one, you have a trending structure. So if you're trading bullish flags, you need to see an uptrend, which we have here. Number two, you need to see the actual correction or flag formation. That would be your confluence number two. Number three, you need to have a breakout. So we have that here on this breakout candle. Number four, if we wanted to add another confluence, we could trade above the 50 MA. So I added my 50 MA, price is trading above the 50 MA. That's 4 reasons why I could get into this trade. That's excellent. You only need a good 3-4 reasons to get into a trade that you can test over and over and over again to see if it works. And now, again, where would you take profit? Next zone up is right here. So notice where this resistance is right here. This is the top of the actual flag. So near the top of the flag, you can notice that that was resistance, and the price paused there just a little bit, came down a little bit, and then continued even higher. So this would have been your first TP target. But as long as price continues to trade in an uptrend, you could trail your stop loss and just continue to trade, for as long as you want until you think it's going to reverse and turn around. And anytime you are wondering where do I actually stop, you can always look left for clues and just see, how high was the price back, a couple months ago? Where did it actually pause and turn around? That's how you can get an idea of how long to hold the trade. Okay, so we've gone over the flag pattern in a bearish trend, also in an uptrend. I've gone over the entry, your stop loss placement. So in this case, in a long, you could have dropped your stop below the daily candle or below the 50 MA. You just want to make sure that your potential profit target is a lot higher than what you're risking. So you just want to keep that in mind. So we've gone over stop loss placement. As far as exit in the trade, you're going to exit from zone to zone. So if you trade the breakout of this trade, for example, look left to see where was the previous reversal area where price stopped and it turned around, which is right here. So we would have taken profit right here, and then we will look left for clues that if this price continues to move higher, what will be the next area we would take profit. Okay, and again, you would just trail your stop loss. So guys, that is an easy way to trade flag patterns. You would take the same approach and apply it on the lower time frame, for example the 4-hour, and you can drill down to, for example, 2 time frames down, or the 15-minute is a great time frame to enter on because you can see the actual price action and what's going on in that moment. So comment below. I hope that you enjoyed this video and that you find it helpful. Go and test it in the market and document your outcomes, and you can build an easy and profitable system off of using flags, or even use it just for confluence with the strategy that you already use. I hope you guys enjoyed this video. Be sure to like, subscribe, and turn on notifications, and I will see you in the next one.